Most trend analysis is made too difficult. Candlestick analysis simplifies what is occurring in human nature or investor sentiment. Notice overbought condition, a potential sell signal, followed a few days ago or followed a few days later by a very strong sell signal, a bearish left-right combo. But the confirming indication was that it was closing below the T line. Once there, no matter what the trading was on a daily basis, with it not trading back up above the T line, was still a strong indication that the bearish sentiment was in progress. This allows an investor to immediately assess what the positioning of their portfolio is doing. If it's closing below the T line, the probabilities now go dramatically in their favor that there's a downtrend. The same scenario can be applied to the analysis of the NASDAQ. There was a possibility of the uptrend continuing, except on this day they opened it lower and tried to bring it back up. That would have told us that maybe we could go long, but this day right here said, wait, they can't get it back up above the T line. We should be anticipating this type of move, especially with the stochastics confirming. When you have the powerful reversal signals that also indicate what's happening, such as a bearish flutter kicker signal, one of the strongest reversal signals, the fact that it formed right here and closed below the T line was a good indication that the bears had taken control of the trend in Netflix. A bearish harami confirmed in Amazon, starting the downtrend. Where was the first likely target? Back to the 50-day moving average. Utilizing each candlestick signal and pattern, or each candlestick signal, allows you to identify what type of pattern might be setting up. Look at the big dumpling top that's setting up in NVIDIA. However, on a daily basis, they closed below the T line after a bearish left-right combo. They tried to get back up, didn't show a lot of strength. Even if you were buying on this day, you would have closed it back out with a bearish signal on this day, closing back below the T line. Why? Because you're already seeing that your stochastics are starting to head down. You've already had a sell signal. Now you had a second sell signal. If one sell signal tells you the bears might be taking control, the second sell signal would be confirming. Where was the first target? Bounced off the 50. Came back up to the T line, and what happened there? A doji gap down, telling you they couldn't get above the T line. Your downtrend was in progress. This is not rocket science. If you can add up what's happening in your major signal or pattern, it tells you which direction the probabilities are by adding all those factors together. That same scenario is occurring in our recommendation to stay long in AXSM, because you can see what happened on this fry pan bottom, the opposite of a dumpling top. What was the one criteria that kept us in this position? They could never close it back below the T line. The uptrend remains in progress. Candlestick analysis is merely the identification of what's going on in investor sentiment, and the signals and patterns create situations to tell you which way things are moving with a high degree of probability based upon what's happened in the past, based upon human nature. That'll be it. We'll see you in the chat rooms.